Howdy. Welcome back to Dion Talk. Don't time the market. How many times have I said that? Don't time the market. I have said, I quote Warren Buffett thinking that if he knew what interest rates were going to be in 2 years, it wouldn't change the way he was going to invest. With the strategy that I use for investing, if I purchased a rental property in 2008, I would have been happy. While prices crashed, it created more demand on rentals, and rents went up in my market. So I don't like to look at the investing strategies and say, here is how you time the market, because you shouldn't time the market. There is a reason why the saying time in the market beats timing the market, because it's accurate. So I'm going to give some advice that you probably shouldn't follow. Don't you love it when the video starts out that way? Uh, I'm not a stock guy. For example, this is an example. This is not what I'm going to talk about tonight when I say time the market. I didn't own any stocks before this year. I actually emptied out my retirement accounts before I retired. I retired in 2022, emptied out retirement accounts in 2020. I'm just not a stock person. They don't excite me, and I think people should invest in what excites them because you are more likely to stick to a plan you are emotionally invested in when it goes sideways, because it's gonna. I'm not saying to invest based on emotion, but I'm saying to be excited about what you invest in so that you stick to the plan. And then earlier this year, there were some protests going on Tesla, and the stock went down about 70%. And I thought, that looks like a buying opportunity. I don't think protests will last forever because it was political and politics shift. Even if it takes a couple of years, politics shift. So I started dollar cost averaging $1,000 a day, and I gave myself up to 1% of my net worth into an asset class that I do not understand and do not invest in. Because if I lost 1% of my net worth, that's a learning lesson and something I can make videos about and laugh about. I wouldn't go above that. And protests stop. I'm going to keep the stocks until it hits capital gains. So I want to own it for over a year. If I sold it today, I'd make about $14,000 more than what I invested in it. And then pay capital gains. Or actually, right now, I'd pay earned income tax on that. And since I don't have a W-2, that wouldn't be too big of a hit. But I'd like to wait until capital gains just because it's a smaller percentage. And so in a year, I could make money. I could lose every penny that I put into it. The stock can drop to zero. That's why I don't invest in stocks. And yes, a well-diversified index portfolio is less likely to have the problems, but it doesn't excite me. I timed the market. I saw an event, I saw a window of opportunity, and I thought, I'm going to throw some money at that. So if you're starting out, if you're brand new and you don't own any rentals yet, I'm hoping that you will invest with the evergreen style, something that doesn't have a window of opportunity. Right? There was about a decade where flipping and the Burr strategy had its moment to shine in the limelight because prices were trending up and interest rates were trending down, which meant you could mess up. And if you waited a few months, the market fixed your mistake. That's not the market we're in today. And the people who've been flipping or doing the Burr method for over, years are going to be just fine. They have the systems in place. They have the skill set. They have the contractors, the handyman, the relationship with the permit office, and they'll continue to do great. But I don't think it's the strategy that you should start with because of the risk level and the market that we're not in. Then I'm looking at real estate and we have a window of opportunity. You should not invest in windows of opportunity if you're just starting out. So for me, financially free, having already retired, or if you have 5 or 6 or 7 rentals and you have your sea legs under you and you understand how to invest and you understand your risk tolerance and you know your market, you know your asset class, I see a window of opportunity where we can do something that I did 3 different times. In my investing strategy, the decade it took to reach financial freedom, because I didn't start until I was 40 and I wasn't in a great position. I had a really low paying job because I got laid off from law enforcement, had a lot of bad debt I didn't know about until the divorce, and I was a single parent with 3 kids. So it kind of sucked where I was starting at. I have purchased 8 properties with 18 rental units on them that produce over $200,000 a year in cash flow that I'm learning how to spend. That's profit after everything, even after setting aside for future expenses. Not all of my deals were home runs. In retirement, in financial freedom, you'll hear people like me and the lumberjack landlord and Michael Zuber say, I'm really only going to get those great deals. We didn't start getting great deals. I bought 3 break-even deals of my 8. I don't think every investor in my market had passed on them because it took something changing in the future to make them a great deal. They were okay. They were cash flow positive. They were straight from the MLS. They took conventional lending, but one had value add. Two duplex. It was a duplex with 2 bedrooms each side that each side had a den that already had a closet. Basically, each side was missing a wall that would make it a 3-bedroom. I bought another one where the mushroom farm had lost its lawsuit and was transitioning to move to the other side of the state. So a 5-mile radius bad smell was going to increase rents and increase property values, which it did. It was above break even, but it wasn't a great return the first couple of years. But now it's about a 30% return and it's doubled in value. Another one, there was infrastructure going in around it. I could tell it was going to be a value add. So I bought some pretty close to break even deals, which once you're financially free, maybe don't go for those because you don't need them. But if a killer deal comes across your path, you jump on it. But right now, I see a window of opportunity because of politics. And remember, politics change every few years. So this is not the strategy to start with. And that's why I gave you that nice long caveat in the beginning before I got into this is the window of opportunity that we have. There are 2 things that tell you when to buy real estate. And I say this in many of my long videos. The first is, are you ready? And are you ready, most people think means you have the money. Well, you need the money for down payment, closing costs, immediate repairs, and the reserves that the lenders are going to require and you are going to want. But have you studied your market? Do you know your asset class? Will you recognize a good or a bad deal? And is there nothing major, Alex, going on in your life, like birth, death, or divorce, that might take away some of your ability to focus on the asset that you're investing in? That doesn't mean don't do it. If you're brand new, that might throw you off. If somebody like Alex has had rentals for 10, 15 years, has 4 or 5 of them, and you see a good deal and you're getting married, congratulations. Sure, pounce on it. You're not just starting out, you're not that brand new person. So you're ready. There's nothing major going on in your life that would take your focus away from being able to invest correctly. That's the first thing. The second thing is, did you find a great deal? You have to be able to recognize a great deal in your market. And it's not just the math. It's not just what the return is. It's, does the property support the strategy that you want to invest with? Is there good enough parking? Is the washer dryer hookups in each unit? Are they side by side units instead of over under? So you have less noise complaints. Are there pet friendly fenced yards? Is it in a good neighborhood? Is it next to something that's really loud or something that smells really bad? You look at the entire picture when you're looking at a rental, not just the math, but you also look at the math. I was planning on buying a property at some point in the next year. My timetable has changed. And I've said, if somebody tells you to hurry or somebody tells you to wait, you probably should block them. I'm not telling you to hurry. Make sure you meet the 2 criteria. Are you ready? Did you find a great deal? But here's why in this window of opportunity, I'm moving up my timetable a little. Now, this is me personally, financially free, already retired early, been retired for 3 years now. I want to close on a property in the next 6 months because of the politics. The current president, whether you love him or hate him, Trump wants interest rates to come down. It will give him a better legacy in his position or whatever his mental reasons are. Who cares? I don't care who's in office. I care that I have a plan for who is in office. He wants interest rates to come down, but Jeremy Powell, who I believe Trump put in the position, doesn't want to bring the rates down. Trump keeps threatening him different ways to try to get rid of him. The most recent was, hey, you went over budget on remodeling your office by $600 million on a $2 million budget or whatever the numbers were. And it's not enough to get rid of him. So he's trying to get rid of Powell. Don't know that he will. He's pulled off some things nobody else expected to happen, good or bad, doesn't matter. But next April in 2026, towards the beginning of the year, was that end of first quarter-ish, Powell's contract ends. So even if the president can't get rid of the chairman of the Fed, he'll be gone early next year. Meaning, whether he gets kicked out sooner or he leaves when he's supposed to, the person that the president puts in his role is going to be somebody who has said they want to lower rates. Don't time the market. But in this window of opportunity, here's why I'm timing the market. I am ready. I know my market. I understand my asset class. I have the money for down payment, closing costs, immediate repairs, and reserves. There is nothing major like birth, death, or divorce going on in my life to take away my focus. So I am ready. I met the two criteria. The first criteria. The second criteria is I won't buy one unless I find at least a good deal. It doesn't have to be a great deal. I haven't gotten home runs. I don't know that maybe one of my properties was a home run-ish. The rest were all just base hits, average deals. Like I said, three of them were pretty close to break even. In the next 6 months or so, I'm going to be looking for that average deal, which means it doesn't lose money. Not the average deal in my market does lose money, but of the ones that are cash flow positive, that also check off some other boxes. Small multi-family, side by side, pet friendly fest yards, washer dryer hookups, enough parking in a neighborhood I would live in that I wouldn't feel bad sending a handy person to, that without a flak vest, uh, not in a flood zone, not next to something loud, not next to something with a bad smell. So it's going to check off all the boxes. But I really wasn't in a hurry. I thought, yeah, in the next year, just because the money keeps stacking up and in retirement, I'll probably buy the next asset. Well, now, based on this window of opportunity, buying properties, because what's going to happen when interest rates go down? I'm not saying you should buy a property and think, okay, at 7% interest rate, which is kind of what we would get now, unless you buy it down or your credit's great or whatever you could possibly rate shop and get a better deal. Thinking, well, that random guy on YouTube, Dion, said that next year rates are going to come down and maybe I'll refinance at 5%. So I'll buy this deal that loses money and next year it'll make money. That's not what I'm saying. I'm saying I'm going to buy an average deal that doesn't lose money today and checks off enough of the other boxes. Because when I could tell you, the day interest rates come down, to the day, exactly the day. And it doesn't matter if it's Jay Powell or the person who replaces him or when he leaves and somebody comes into the office next year. Interest rates come down the exact same day, prices skyrocket. You have pent up buyer demand from people thinking it's unaffordable, and a lot of home buyers who are our competition as investors buy based on payment. When interest rates come down, the amount that they can borrow to buy the property, because they're not looking at yield, they're not looking at cash flow, they're not looking at net value, they're thinking, how much can I pay every month? And what does the interest rate do to that? So if interest rates come down, prices are going to go up. When prices go up, it becomes harder to buy. It's hard to buy now. It's going to be harder to buy when rates come down, which is going to make more people renters, which increases demand on a limited supply. So put that as your first asterisk. Interest rates are possibly going to come down when Jay Powell leaves office, whether it's he gets kicked out or April comes. Then let's add that AI at some point is going to be taking jobs. Some of that's happening now. I'm actually not against AI replacing all of us. I have met people, we have had a good run, and time for something new. Just in case they're listening, AI, I've always been nice to you. It is a race to own assets. When blue collar jobs go away, when, oh, they'll never coding goes away. Oh, there'll never be a plumber. And then you have robotics that go out and can be plumbers that can do things better than we can. It might not be for a few years, 5 or 10 or 15, but between now and then, before universal basic income becomes the way that most of us have to live, the people who own the assets will benefit. So this is a window of opportunity where I believe in the next 5, 10, or 15 years, people should be acquiring cash flowing assets. AI is a real threat. But because of interest rates, and I say don't time the market based on your situation, if it's anything like mine, you are ready. You know your market. There's nothing major going on in your life, and you were planning on buying anyway. I think it's time to focus. And like Zuber says, from one rental at a time, do the work. And I was going to cut this out of the video that I cut out short and leave it for the live stream, but I made a huge mistake with my book. And so I'm going to ask some people who are here for the live stream. And AI does do peopling. It represents 70% of the counseling happening in the United States today. So it does do peopling. Um, I wrote a book on a Mac in a program called Pages. And I wrote, and I felt like a lot. And I thought, it just doesn't seem long enough. So I made sure everything that I would want to cover in the book is in the book so that I'm not tempted to make a sequel like Zuber had to do the second book. I wanted everything to mind dump what it takes to reach financial freedom in a decade or less for a lazy person, even if you're not starting from the best position, in one book. In Pages on my Mac, it was 187 pages. And I hired a formatting company to format it for the Amazon self-publishing, whatever it's called. I want to say it's DKP, but it's not. It's KDP or something like that. And it's formatted now, back and forth a little bit more for some final edits. But once it was formatted and they'd added these things called margin and they used the right font, the book is 500 pages. Is 500 pages too long for a book? Now I'm cheating a little. It's like 496 pages and I put in 4 pages for notes at the end, but it's 500 pages. You'll have to let me know. Is that too long? Even though it is me trying to include in the format of like an instruction manual, not a novel. Here is all of the information from all of the different angles that it took for me, an average person, to reach financial freedom and walk away from a job that I liked and never have to work again in my life in 10 years or less. And I have stopped recording. That will be a separate video that I put out probably in a couple of weeks. I'm going to go through the questions, get to all the howdies. And if you have questions, please get them into the chat because that's what the purpose of these Tuesday calls is that they last as long as the questions do. And if there's not a lot of questions, then it doesn't last very long. Tonight at 6 p.m. Pacific, Justin Canberra is joining a Financial Freedom for the Lazy Person course call. So if you are in the course, we'll see you there. And if you know Justin, he house hacks in a high cost of living area, invests out of state in several different markets. Some of you in the chat have interacted with Justin, and I take notes when he's here. So one of the cool things is having people come and help is I'm still learning from them. Hope everybody is having a day full of amazing. I see Frank, howdy, from Watsonville, California, because even Frank is lazier than me and hasn't moved to Washington yet. Howdy, Alex. Good to see you here. It is a good day in the Pacific Northwest, unless the county tax assessor comes to your house. That could ruin your day. See, that happened here today. Flavio, Mikey, good to see you guys. Howdy. Rich Camino, Aldair, nice to see you. Dark Spring, I think I saw a comment from you recently. This is where you can ask a question. And the book has an index at the front. So if you get the Kindle version, it's clickable. It could take you to the chapter, but it literally lists out, if you're looking, that's the point of the book. Reference books are generally big. Okay, good. So yeah, Alex, it is when you're screening a tenant, go to this section. When you're looking at what I think of 401ks, go to this section. Have a drink first because it's going to be kind of rough. But it's each section covers a topic that's related to reaching financial freedom. And it does go in a chronological format. It goes through the mindset shifts. It goes through the actionable lessons. It goes through concepts like the binder strategy. Then there's the Dionisms, the things that I do backwards that Work in some markets and don't work in others. Things like I want my leases to end in the winter and a full explanation of why and why that might not be the best thing for your market if you live in Siberia, like the lumberjack landlord does. Uh, and then at the end, there's kind of a what happens after you reach financial freedom part. Kept that pretty brief because the book is not meant for the financially free person. It's for the person who's on the journey to reach financial freedom. Maybe some of these could be mistakes that you avoid. Good afternoon, everyone from Grandview, Washington. Nice, that's not too far from me. Full guy REI. 1% of my net worth, I invested $86. If I started with 1% investing when I was in the bad debt, they would have had to pay me to buy stuff. I actually think I've said many times, if somebody paid me to take stocks, I would still not take them. I would just sell them. Still looking for a good deal, Alex? There you go. In your position, this might be a time where you start looking at an average deal. Just as a thought. Old guy AI doesn't do peopling either. It is replacing customer service positions. Which one was it? It was, I think it's literally a CRM, a customer relationship company. What was their name? They're not doing any hiring. All of their new positions are just being outsourced to AI bots. Now, yeah, isn't in person yet, but they answer the phone and they chat. Cabragoon Cabulus, 500 for a lazy guy like you. 500 where you can look and say, let the index and think, this is the section. I think I could have the index here somewhere. Do I have the index? I'll pull it up, I think. Um, share screen so you can see the index. First, I'll have to, it's literally the whole book. So here we go. Share screen. There is an intro by Zuber, table of contents. So you can go through and you can literally say, you don't, if you don't want to read 500 pages, which one of these sections is something that today, like how much in reserves? You could look at uh, that specific chapter and think, let me go through that today. What page is it on? Uh, Believe me, I was in shock. It was 187 pages in pages. But there you go. A preview of previews, which represents me doing work, which is not my strong suit. The lazy guy. I listen to books and I play video games. What does Tyrion Lannister say? I drink and I know stuff. Apparently, I know enough stuff to write a book that accidentally becomes 496 pages. I probably should have scrolled down and showed you a page so you can see the size. But you saw the intro. I'm sure people might pause the video at a certain point and go back and go, oh, what did Zuber say about Dion writing a book? And then putting Zuber's logo on it because my goal is to help grow the one rental at a time community, even though that's not me. That's Zuber's thing. I just like what I've learned from him that's made my life easier. So if I can help him, like I narrated his Audible books, if I can make a book that somehow grows his community, I am on board with that. I have the cover, I think, which I could also share. I think I've shared this once before, but this is the cover of the book. It's like one rental at a time threw up on it. And it's financial freedom for the lazy person. And the idea is I don't want an alarm clock. I didn't want a schedule. I don't want to know what day of the week it is. And that might not be your reason for reaching financial freedom. You might want to invest so that you can create generational wealth. But I've met my kids. And you might want to invest so that you can do a job that you love without having to worry about the money. My thing was, if you want to know the easiest way to do something, ask a lazy person. Well, I wanted to know the easiest way to do life, like all of it. Charles, howdy. Oliver, howdy, Oliver. Oh, it's way too early in the video for an overshare about a guy named Oliver, but he was interesting. Dividend Dave, howdy. There are dad jokes in the book. Alex, reference books are generally big. I don't think it's too long. Okay, thank you. Que pasa? Uh, Nada? Yeah. Every joke that comes to mind in Spanish is not appropriate. I don't know why that is. You're going to buy anyways? There you go. Justin will be on Friday live stream with you. Cool. So we'll have to set him up for Friday tonight. Taxes has to raise your tax base 400K. I think that's what's going to happen with me because the assessed value on my BRRRR, first and last, never going to do it again, was as a single family. And it hit their radar that it's a duplex. So I'm assuming, make an assumption, you make an ass out of you an umption. You, the tax base, they haven't hit me yet, but the tax basis on a duplex is definitely going to be different than it is on a single family house. And this stupid county has a view tax. BuzzTune, Mikey, with your cash flow, how much reserves would you want for the next purchase? Do you still have the 50,000 in reserves? Now, yes, the 50,000 is a reserve. I don't know that my reserves are going to go above 50 with rental properties because so it's not a sliding scale. I should probably open up AI and ask it what I'm actually trying to explain here, but as your portfolio grows, your reserves need to grow. So that makes it sound like a sliding scale, Mikey. And here's the Cliff Notes version. When I had seven or less units, that was four properties or less when I had seven. 10,000 was enough in reserves in between 2013 and 2018, right? So inflation has been like at least 40% since then. So I would say minimum reserves I would start with now for anything more than one property, it's going to be 15, maybe 16,000, like 40% more ish plus than my 10,000 that was good enough for me. So times have increased that amount. Once I was above seven, I thought more things can happen at the same time. So I increased my reserves to 30,000. So now maybe it'd be 40,000 with 10 rentals or something like that. I don't think I'd have as much in reserves as Frank and Cynthia do. I really like how they're conservative that way. I just let me explain why and what the difference is. So when I retired, I have 50,000 in reserve. Michael Zuber with 180 plus units and Matt the Lumberjack landlord with 150 units keeps 50,000 in reserves. Because here's what happens. Those first 5 years, so Frank and Cynthia don't drop your reserves down to 50,000 total. Because in those first 5 years, your cash flow hasn't hit that exponential point yet. That chart we've shared a few times. When you're at the halfway point, you are not at the halfway cash flow point. You're at the halfway in time, but you're probably at 10% in cash flow because it happens towards the end. Once you hit the exponential cash flow growth between years 7 to 10, maybe, and the cash flow handles almost every mistake that pops up, my cash flow could replace a septic system. My cash flow 1 month could replace a roof, right? So I don't have to have the reserves to handle a roof or a septic system or a water heater. Like I haven't touched reserves, I want to say since 2018 to do anything with my properties. The 50,000 is there. Let's say a well goes out. Only one of my properties has a well, but if it goes out and can't be replaced, I'm definitely going to burn through tens of thousands of dollars until I get the secured contract to either get a new well or tie into city water. But the 50,000 will handle whatever that problem is. That could be temporary tank, water delivery. It could be all kinds of things, right? There's ways to solve that problem and money helps. The cash flow means more than 50,000 isn't required because most of the business, now maybe the lumberjack landlord rehabbing the jail and doing several other projects and selling properties and buying properties, his reserves might have not have handled that. His cash flow might not handle that. He might be going into his reserves or into his investing fund. But Mikey, I don't know that I would do more than 50,000 while I was in growth mode because it would be better use for everything above that to be put to work. So as my portfolio grows in retirement, I increased it from 30 to 50. There could come a time where inflation has eroded the dollar enough to where I don't feel comfortable with $50,000 and I might increase it. That's 5 or 10 years in the future currently, depending, unless we have some black swan events like 2020, 2021, where they just start printing billions and billions of dollars, hundreds of billions of dollars again, then they might increase it because this is the thing it's hard to explain. Houses, rent, the cost of most things haven't changed in 50 years. The value is about the same. What's changed is the dollar. The dollar keeps losing value because they print more of it, so it takes more dollars to do the same thing. When that happens, then I would increase minimums. Thank you, Mikey, for that question. I much appreciate it. Court agreed on the rate horizon. Thank you. And it's one of those things. It's like I try not to time the market. So I definitely don't buy a bad deal thinking, well, when I refinance, it'll be good. Buying an average deal that will become a better deal if I can refinance. So if I can't, I don't lose my shirt. It's because it's a Babylon 5 special shirt and I wouldn't want to lose it. But still, I'm still starting with 30-year fixed rate debt. I'm still going to buy down the rate. I might lose a few $1,000s that way. I'm planning on if a long-term investment, I can't refinance, but if I could, I've moved up my timetable a few months, not rushing myself. I'm still going to wait until it's a good deal, like an average or better deal. Logan, do you have a guesstimate when the book will be available on Amazon? So the company that did the editing, formatting, didn't do any editing. Somebody called me arrogant because you haven't hired an editor. No, the whole point is I'm not a good writer. I'm not good at a lot of things, and I still reach financial freedom because there's a lot of people out there that might not be good at a lot of things, but you can reach financial freedom. So it's not a polished, edited somebody else. I went through it as I was writing and read it like I was going to narrate for Audible because that's how I would find any grammatical mistakes. Uh, but they send it back, and I gave them, I think, a list of like, here's a bunch of pages I want to move a thing around because it was like the heading for a section was like the bottom of a page. And it should have been, even if it's moved down, so there'd be a little gap at the bottom of the page, it'd be moved to the next page so that it was heading and then section. So I sent all that back to them. It's a good company. If anybody's writing a book, I'll connect you with them. Price is interesting. Once that's fixed, they get it to me. I have to create the, whatever it is, I want to say KDP account with Amazon because I'm already an affiliate. Supposedly within 72 hours of it being correctly input to the way they want it, it's available for order. We'll see. So, week or two. Audible version, once it's completely done, formatted, put on it, and it is in the done version, I'll have to record the Audible, and that could take another few months. But the written one will be out a few months before the Audible is. Michelle, 400 pages. It's 500 pages. No, yeah, 500, 496 pages, uh, which we might get out in Spanish. How how big is the difference between Colombian Spanish and United States Spanish? That'd be because there were some things that threw me off growing up in Southern California and then going to Colombia. And I thought I knew some Spanish and I see signs and that's not even the word I would use. So, Alex, you're going to need 10 copies to get started. Nice. Brian, howdy. Cabergoon, if I can't at least read 500 pages, then I'm not motivated enough. There you go. Or you could be like Matt, the lumberjack landlord, and be so lazy you wait for it to come out on Audible so you can listen to it. Old guy REI, not that it matters, but what is the price point? It was in your weekend discussion. So Amazon charges, I think this is how it works. Something like they have a print based on how many pages. So like 300 or less pages is $10 or nine something. 3 to 500 pages or 3 to 600 pages, I think is like $16 or something. I have to look that up. And then Amazon takes 40% of anything above that for their profit margin. So they get to charge to put it together and then they get to charge for the profit. So a lot of the books that are like mine, like Set for Life, One Rental at a Time, right? Those kind of books, their price point is $14.95. My goal is to get it there. But if the cost to make it ends up being $16 or $17, it might be $19.95. So it'll come to, I have no images and no charts. I wanted this to be a book. There's a lot of bullet point stuff, but I wanted it to also hit an Audible and make sense. It's really hard with Audible to read a chart, right? because the author expects you to be able to see side by side comparisons. I wanted to do story format comparisons. Uh, so my goal is that it's never above $20, but I'm not going to lose money to make a book. I don't need to make a lot, but it's got to be above what they take. So that will, and I'll probably share screen and show people what their process is like. Michelle, great info on timing the market. How are you preparing for the next property? What are you doing different? What am I doing to prepare for the next property? The next property is going to be added to the MLane platform. So the landlord introduction letter will say this is the portal that I use. Uh, I don't know that I'm doing anything different because I'm still spending money on stuff, but I'm kind of watching every month as the money for down payment and closing costs and reserves grows, sort of the options to buy. So I guess I'm tracking that every month. Uh, was thinking of going to Scotland in the summer. Something else changed, so I stopped that. Still planning on Thailand in the winter. Don't know that I'm changing anything other than I'm probably going to do more than 15 to 20 minutes a day looking at deals. Probably do 30 minutes to an hour every day. That's probably the change. Probably more time doing the work. I'm not going to do 3+ hours a day. You get your mind starts seeing numbers funny, right? That synesthesia kicks in and you might make a mistake. But I want enough every day to where I know that I'm looking at everything in my market that comes close to my buy box. And then I'll be the filter, hoping that my agents send me more than what I'm looking at so I can say no to things. Oliver, got a tenant who signed a 2-year renewal a month ago, and now right before it starts, they're asking if it's too late to switch to a 1-year lease. What would you do? I'd probably just switch to a 1-year lease if it hasn't started. I'm pretty easy with that. I'm not sure what state you live in, Oliver. In Washington, if it's more than 12 months, this tenant signature has to be notarized. But 12 months or less, you don't. I'm usually pretty flexible on when tenants want to leave because my goal is to limit tenant turnover, right? It's costly, it's time consuming, but it's sometimes the best outcome. You get the biggest rent increase on tenant turnover. You get the options to do value add on tenant turnover. So while the lazy strategy is to try to limit tenant turnover, I will definitely benefit from it when it happens. Angry capitalist. Howdy. Old guy REI. Frank and Cynthia are nuts. Absolutely. One of them is. The other one's really tall. That's a joke. Don't stab me. Corridor Oliver. Perhaps maybe higher rate for shorter lease. Maybe. I've never done that. I've seen that. I think if I was going I know I've never even done it on less than a year when a tenant wanted out at a certain time. That is an option. I think when you offer a renewal, it's a little easier to go, hey, if you want a 2-year lease, you might get a break on your rent. But I haven't done that. I think if I had no demand for a rental and I had trouble finding a tenant, I might do that. Howdy, Laura. Good to see you. Flavio, Frank, don't say that. You only need to move to Washington. Move money around. There you go. Dark Spring. I still think I'm a lazier investor than you. You at least look for deal, set it up, then upkeep the property. Yeah, not a ton of work, but still more than I want. I spend under 2 minutes a day on stocks. So, uh, this was what I tried to put in my response because I think that was the message I saw from you the other day. I agree. Stocks can be a lazier investment. So when I defined lazy, I didn't start thinking about money until I was 40. I thought, well, I'll do 20 years in the Marine Corps and get a pension. Nope. Desert Storm downsizing happened. Then I thought, oh, I'll do 20 years in law enforcement. And in about 8 years, 2008 housing crash happened and my pension got taken away. So I started thinking at 40, okay, I need to create a pension. And I was at a CDL school making $17 an hour, raising 3 kids as a single parent with about $89,000 in bad debt I didn't know about until a divorce. So Dark Spring, if you were 40 and you made $17 an hour and you had 3 kids to raise and you had a bunch of bad debt, how much do you have to invest in stocks? Would you retire in 10 years without finding a job that makes 10 times what you're currently making, working until you're 80, right? So compound interest can do its thing. So if you invest in stocks early enough and you let it, compound interest do its thing for decades and you make enough money to add a significant amount to your investing, stocks are great. but you have no levered position. If you use margin, that can blow up in your face. I have 30-year fixed rate debt. So I think if you're using adjustable rate loans, that can blow up in your face too. So stocks and real estate, neither one is better. Your position in life could make one work better for your situation. Since stocks wouldn't help me, I had no money to invest in them. I had no time for the compound interest to kick in, but I had to live somewhere. I could move into an apartment and rent out the house. That reduced how much I was spending. Then I could buy a duplex, owner occupied duplex, 5% down, best interest rate. Then I could save to buy a couple of rentals. So within 10 years, with $320,000 invested from my income, I generate last year, so the year before that it was a little bit less, but last year was $240,000 in profit after taxes, after setting aside about $60,000 for future expenses from real estate. Now, I invested for 12 years. I started saving in 2010 and retired in 2022. I didn't get that first duplex till 2013. So I owned rental properties, purchased as rental properties for 9 years when I retired. None of that for me happens in stocks unless I made significantly more money. Your situation is different. You hopefully made more money than I do, didn't start with a bad debt that you didn't know about, and you have some time for compound interest to have an impact. So you're right. You could be a lazier investor than me. The price point here will be 500,000 plus. There you go. Kyle, howdy. Logan, cool beans. Looking forward to reading it. Awesome. Thank you. Corridor, need a Spanish reader. Yep. Michelle's going to do the help me with the conversion, but I'll need somebody to compare that, that's for sure. Flavio, any free books for the laziest investor like you? Of course. There's a ton of free books out there. A lot of them are here on YouTube, at least the Audible version. And most books you can get at your library for free and listen to them. A lot of libraries now have an app where you can check out Audible books on the app. Don't even have to go to the library anymore. I'm sure it'd be good to do standard Spanish so it's understandable across different speakers. Absolutely. Brian, if AI does take over the majority of jobs, do you think they will still allow us to own assets? I'm worried that they will try to zero us all out. Seems like New York and Minnesota headed that way. Yes, but I think we'll have enough of a window before it happens to make changes. I don't think it'll be federal. I think it'll be on the state level. And I think there will be assets to move into. It's a race to own assets. So it could be that because when you own a stock, the stock can appreciate. Now, if it's an index, some go up, some go down, but it'll have an average increase. Some years it can go up and some years it can go down, right? But with real estate, you have the levered appreciation, right? You invest $100,000 on a $400,000 place and it appreciates. You're gaining the appreciation on the full amount, not just what you invested. You get depreciation on your taxes, so you're not really going to pay taxes on a lot of the income. You get the tenants paying off the loan. So your equity position grows to the point where, believe me, there will be enough of us on YouTube screaming. Enough socialists have been voted into office, and enough people are on UBI that it is time to exit the asset thing. And then I might make a channel on geo arbitrage and what country you should move to with just money. And that money might be moved to crypto or it might be moved to some other asset. But yeah, there's plenty of countries that have stripped people of properties. I believe there was someone in the chat who lived in Panama when they had the regime change, and their entire family is really against owning properties because of what can happen to property owners. And so they kind of don't like that she is investing in real estate in the US because they expect the US to do exactly what Panama did. And I totally get that fear. I think we'll see it coming, and I think we'll be able to take action. I don't think stocks are any safer. Right? The guy getting voted in New York, the first thing he's saying is we want to take away public ownership. Stores will be owned by the government. Well, there goes your Costco stock, your Walmart stock, your regular Kroger stock. So stocks are at just as much risk as real estate is. And at some point, people might need to start voting the way that makes sense. Both sides suck. So it just depends on where you're at in it, I guess. I think before they take the assets away, though, Brian, and so personally, I would not be in Los Angeles County. I will not own in King County in Washington. We don't really have any blue states. We have all red states with blue cities, and some of the cities are big enough to make the state look blue. That's my personal opinion. It's probably wrong. I don't care because this is my opinion. So in the red counties, I invest for the assets that cash flow. Before we see asset seizure, we'll see it in the bigger cities, right? But when we see asset seizure in the red counties, first we're going to see universal basic income. Then we're going to see Section 8 increased because you're going to have people who are displaced by AI. And so whenever people are displaced, you have things like WIOA, Innovation and Opportunity Act or something. I forget what the I is for, but it's WIOA funds designed to help people become more employable for training, for assistance, whatever it is. We're going to see an increase to that. I want to be the person who owns the asset that benefits from tenants getting UBI, more consistent rent payments, probably even rent increases, more Section 8 vouchers. Yep, and it'll be money printing before it all collapses. And again, I'm not trying to solve the planet. We can't boil the ocean, right? But we can carry our little bucket of water. I want to be the asset owner, even if it gets to the point where assets start getting stripped. It's a better position than just being the person who just gets basic. Watch every sci-fi show from the future and look at how people who live on basic exist. Olinka, howdy. Hope to see you in the course call tonight with Justin at 6. David B. Howdy. Let's say you had no rentals and only cash. How much money would it take to make 10,000 in cash flow in the Tacoma and surrounding area within 2 years? Not going to happen. Doesn't matter. I mean, if you had that much money and you wanted just 10,000 a month, there's other things to invest in. It's not a 2-year game. It's a 10-year game. I don't think I didn't have 10,000 in cash flow until a year, like year 9, end of year 9. And then the next year it was 17. That's how fast the growth is at the end. You have to have levers to pull. It's not owning real estate. You take $1 million. Let's say you had $1 million in cash and you go and you bought $4 million worth of property. So many people would say, well, if you have a 10% return, that's $100,000 a year on your $1 million that you invested. 100,000 a year, that's almost 10,000 a month. It's 9,600, whatever it is, math. Divide 100,000 by 12, and that'll give you how much you have per month. You're almost at that investing $1 million in cash. I invested 320,000 and I have profit 21,000 a month in cash because of the decade. So what happens is you buy the first couple because you need the stability to be able to borrow the money. The lenders aren't just going to lend you a bunch of money like that. You need to have the 2 years of tax returns that show rental income so that you can get rid of your debt to income ratio. Because if you had all money and you're just buying in cash, your return actually gets worse. You're going to pay more taxes because you don't have levered depreciation. Your appreciation is only on what you've invested. But in those 10 years, here's where the magic is. So I start saving in 2010. 2013 happens, I close on a duplex that I'm house hacking. 2015, I get a duplex. 2018, yeah, beginning of 2018, I get a duplex. It was like the end and the beginning. So I get that, and then I pay off the property, which was a huge mistake. And then I get a fourplex in 2020. But here's what happens around 2020. So I've owned the rentals for 7 years, one of them, one of them for 5 years. That's where the magic is. That one property had 7 years of principal pay down, 7 years of appreciation, 7 years of rent increases. I had stopped house hacking and was in my second house hack. The next duplex had 5 years of appreciation, rent, principal pay down, cash rental increases, opportunity to refinance. None of those levers exist when you start investing in the first 2 years. So to get to 10,000 a month in cash flow, you can easily do the math and go, okay, if I get a 10% return, I have to invest $120 million to get 10,000 a month. It's way less than that, but 10 years, not 2. I'm not trying to say it in a mean way. Like it would be nice if things happened faster. Uh, but there's so many different things, the appreciation, the principal pay down, the cash flow, the opportunity to do value add. How many times did I own a property for 5 or 6 years and then a tenant moves out? So I put a closet in a den and now it's a 3-bedroom. Like that doesn't usually, You could probably buy properties that were ready for value add, but in that case, if they're vacant, a lot of owners did the value add and sell it for such a high price, your return is not going to be that good. So it's a 10-year journey. Nobody likes to hear that. If you started investing today, you just found my channel today, you were in the graduating class, 2035. Even if you have $500,000 in the bank to invest right now, that you don't care what happens to it. If you started investing with a bunch of money today, those first few properties are going to be where you make your mistakes. Would you want to put it all to work and then realize you were doing all the math wrong and you didn't think of things like an HOA is a deal breaker? Short sales and foreclosures can lock up your money for a year or two before you even own the property. So it's a really good question, David. I would just hope you can add more than 2 years to your timeline. Yes, you can reach financial freedom in 5 or 7 years. It can happen. But if you make a 10-year plan and you get to 5 or 7 years and it hasn't happened yet, you're going to stick with it. If you make a 2-year plan and in 5 years, you have, I don't know if I can open those charts fast enough to share it here. Let me just open these really quick and then I will share them just in case you haven't seen this. People think when they start investing, they think, I'm starting now. So you want a 2-year timeline. I'm saying in a 10-year timeline. People look at a chart like this and they think, okay, I start at zero with $0. And then in 10 years, I'm going to have my cash flow, which my stupid picture is always in the way, of $20,000. It says that in the top right-hand corner, just in case you can't see it. But you want $20,000, you can see it, a month in cash flow in 10 years, right? So they think if I get to 5 years, I'm at the halfway point in distance. I should be making $10,000 a month. So if your goal is 10,000 on my chart, you would say, well, it takes 5 years. But in reality, that is not what it looks like. At 3 years, and this came because Curtis, PE turned RE, told me, I'm 3 years into my journey. I don't feel 3 years into my goal. At the 3-year point, I wasn't even making $1,000 a month in cash flow. And that straight line, that linear line, XY axis said I should have been making six. So if I had a 2-year goal and I get to the 3 years and I'm not even 1/10 of the way to the goal when math says I should be a third of the way there, I probably would have quit. And then at the 6-year point, I broke $1,000 a month in cash flow. Math said I should have been at 12,000 a month if I want to hit my goal of 20,000. It wasn't even, again, a tenth of the way there. It wasn't until that year 9 when things really start to happen where you can refinance to a better rate. A rent increase is not hitting 1 or 4 units, it's hitting 15 or 16. Refinance 5 properties to a better rate. Tenant turnover, add a closet to increase the value. It all happens in the end. You have to have this hockey, you have to have the stick before you can have the sweep, right? And this stick right here is when most people quit. I think I'm doing a webinar with BiggerPockets in a month or two on why most people quit in the first couple of years. And these charts are going to be a big part of that. Because you can literally look at it and go, in 10 years, I'll have $20,000 a month in cash flow if I do these things with a 10-year plan. And so halfway there, in 5 years, you think I should be making 10,000 a month, and you won't be. That hockey stick growth hasn't happened yet. There are people like Cody Davis, who has come and presented in the course too, who had hundreds of units whose cash flow wasn't $10,000 a month in profit. A lot of it was because he's recycling the capital to grow the portfolio. But it's still the same thing. Got to get past those first 5 years of suck. Hopefully that helped, David. Angry capitalist. Realtor who I'm working with is now bringing me off MLS deals. Really nice improvement. Recommendations for getting tenant out in order to occupy, cash for keys. How long is the remaining lease? Non-renewal. And if you're going to own or occupy, remember the banks don't think you're going to close on the property and move in next month. They give you a window of opportunity where they generally don't even know or care where you live. You just can't get another owner occupied loan for 12 months, but within reason, 90 days or whatever. I used cash for keys on the one where I went and I met the tenants. I was there for the inspection, the walkthrough. I met the tenants, and it took me about 4 nanoseconds to figure out which one I was getting rid of. Even if it was an eviction, that would be the one. Cash for keys made them cry because nobody had ever helped them before, but helped them relocate. And if you're doing cash for keys, I recommend not giving it to the people. If the people are in a good enough position where you can do cash for keys that says, once you've moved out, I give you this much money. Most people aren't in a position to do that. They need the money to move out. I wouldn't give it to them because you can give them money and then be forced to evict them. What I did is I did cash for keys and said, I will pay this amount of money towards the deposit of wherever you're moving to, so that when you move in, the money is yours. And if you don't move out, I go there and I get my money back because you didn't move in. It's just kind of like an extra step to protect myself. Laura, hi, Michelle. I get it. I have done translations for the state. Nice. Be happy to proofread it. That would be awesome. I would love that. Angry Capitalist, I feel like you and Simon from Uneducated Communist would have an interesting conversation. We did a video one time where I explained the binder to him. Simon is super smart. He's not a real estate investor, and his audience isn't real estate investors for the most part. So we haven't really collaborated on a lot. I'm just the guy that watches his channel. We've stayed in an Airbnb a couple of times, had some really cool overnight conversations because we go to the one rental at a time event in Vegas, and Millennium Mike, Lumberjack Landlord, me, and Justin Cambra, and Beth Traverso. A couple of us have all just got an Airbnb together. Uh, Great guy, tons of knowledge, not really a real estate investor. Well, okay, how do you decide if you will accept a pet in your rentals? I accept pets, period. What do you look for? How do you decide what kind of animal to accept? If you have to, you can use insurance as the nope, you can't have that breed because insurance doesn't cover it. Take the breed that they're talking about moving in with and send it to your insurance and say, hey, does my insurance cover this type of animal? And if it does, great. If it doesn't, can it? If it does, what's the cost increase? Factor that into your rent increase for that type of pet. I generally allow pets for a couple of reasons. First, people will just go online and take 5 minutes to Google emotional support animal fake paperwork and print it out, and you can't really prove it's wrong. And so they get around you that way with almost any animal. The second thing is people don't like to move with pets. Even if the human moves, it's a relocation for the pet. So my goal is to keep tenants long term. So I always allowed pets. I don't think I don't think in terms of aggressive animals. I have known people with a chow that my son got 17 stitches from. That was just the best dog, and nobody ever hurt nobody with. Um, I've ridden horses my entire life, and some horses are just assholes. So it doesn't really matter the breed. But if they come with a breed you're not sure of, check with your insurance. That would be really the only thing that would make me say yes or no. I generally tell people if you're going to have pets, that's great. I'm going to get to pet it. I want to meet it first. I've never used it as a disqualifier. But if you show up and it is just absolutely trying to murder you and pulling on its leash, maybe that's a reason. Wealth with Rentals, howdy. Julie, what are your most outrageous, calling me during a live stream, what are your most outrageous thoughts on the monetary system changing? That would be the conversation I want to have with the uneducated economist, because he goes so far into history with that. Uh, I'm not much. No, I do love history. There's an actual novel I want to write that will end up having a bit of history in it, but too much of an overshare. I think with the monetary system changing, what matters is to own tangible assets. I don't see gold as an asset. I don't see silver as an asset. I don't see individual stocks like my retarded butt buying Tesla. That is not an asset. That was me gambling with 1% of my net worth. If it works, great. If it doesn't, who cares? Probably what I'll do with crypto at some point. Net worth is around a bit over 3 million. If I break 5 million, I'll probably put 1 million into crypto. I would say Bitcoin, but it could be a different coin then. Who knows what's going to change in the future? Bitcoin's the best performing asset in the last 10 years, so I could see that continuing. So all the crypto people who attack me all the time because they think real estate's stupid, sure, I don't ever have to work again. And I will watch there could come a time where I just offload all the real estate, put the money into something to live on, because my goal is not generational wealth. I think that's the dumbest thing you could do for your kids. One of the dumbest, top three dumbest things. Uh, but outrageous thoughts, and clarify with the question. Outrageous thoughts, we could become a socialist country. And I know there's a bunch of people in the chat that always go, "Oh, you hate Democrats because you think they mean socialists." Well, it's called the Democrat Socialist. Uh, for there's a reason, and the guys publicly in New York is doing that, so it could happen. We have uh, certain sections of population that are growing faster than others that lean that way, so it could totally happen. And before it does, I would want to find an exit strategy uh, before we go. What do they do? The property stripping, no public ownership, no companies. That's outrageous. I don't think we're anywhere near that. I think we're going to go back and forth forever, but it's the pendulum doesn't swing long enough or wide enough either side for me to go, yeah, I want to sell everything and leave the country or anything. Dark Spring, I fully agree with your real estate worked out. Great for you. I never made a ton. I was just a good saver and dumped it into the stock market during the pandemic crash. Made out like a bandit, just lucky. I don't know. The harder you work, the luckier you are, right? So I don't think you're lucky. I think you've been doing it for at least 5 years. So I hope it works for you. And believe me, owning rentals is not for everybody. I've mentioned him a few times. I was in the Marines with him, but my friend Adam, who is probably going to be the guy who takes me out. The guy hates me. We're best friends, but he hates my guts because things just work out for me. The guy who got divorced, found out about all the debt, things just work out for me. Whatever. Um, he should never own a rental. He cannot communicate with other human beings. I've no idea how he's ever held a job more than a couple of years or kept a wife as long as he has. Love the guy to death, but he is a raging asshole and he couldn't manage a property manager. So it's good that he doesn't own rentals. He owns stocks. So sometimes your personality might be a part of it. And these are all things I say to his face. So, uh, Wealth with Rentals. Good evening, Freedom Works. Howdy. Wealth with Rentals. When I have a single family residence that I turned into a duplex and it has one backyard, how do you make sure that both tenants are going to be enjoying the shared backyard equally without problems? You could separate the space depending on their points of access to it. You could make it a common area and say both parties are responsible for the cleanliness of the common area. And it's clear in the lease that they do that. Me personally, all of my duplexes are separate fenced yards. My fourplex doesn't have clearly, I always say it, clearly delineated spaces that are for each one. So that's the only one I have a rental, except for where I live, a rental service, because I'm not mowing my lawn. I'm way too lazy for that. So the tenants do it, but all the other ones, the tenants mow their space. Do a diagram of the property and put it as an appendix in the lease saying this is your area of responsibility. This is where you can park. Uh, Clear communication. I think that would be the way I would do it. And when you say without problems, don't know that's possible, but I would go with the least amount of problems. Here's how I would handle it. Is it better to divide the backyard with a fence to separate the backyard into two, but then it will be smaller for each tenant? I've divided them every time, even though it is smaller. One of them, I have the gate is on the side, and so there's a gate in the middle. And so if the one tenant wants to get their RV in and out, it goes through the other person's backyard. But they're neighbors, they communicate. Been zero issues so far, except for the guy at the fence with his RV. And he's a CDL instructor at the school I worked at. Oh, there's been no end of sarcasm with that. Overshare time. Dave K. With the new rent control in Washington. Thank the sponsor of today's video, Skull Vodka, who does not sponsor my videos. They just make them possible. With the new rent control in Washington, how are you approaching well under market rent in prospective properties? Being very careful. It really sucks for the tenants, not for me. buying a property if it's far below a market rents, right? So I'll buy properties that are below market rents. I'll do the maximum allowable increase, and it will only take 3 or 4 years to get to market rents. I'll make sure the deal makes sense. I'm okay with rent control because going forward after that, it just continues to make you richer and richer. I did a whiteboard video where I demonstrated clearly mathematically how rent control in Washington State is me personally going to make me $138,000 more in profit than I was going to make. I was already going to make hundreds of thousands each year, but in the next 2 years, I'm going to make $138,000 more than I would have without rent control. But let's say the property could rent for 2,000 and the tenant's paying 1,000 or 800, right? They haven't had rent increased forever because like my brother had tenants from 2006, no rent increases. Then he did a big increase with the binder strategy because he knew rent control was coming. So thanks for voting in rent control. It's making him thousands of dollars more a month. Me too. If it's that far below, what it forces an investor to do is to have tenant turnover. And there's legal ways to make the tenant leave. You have 90 days to get out. I'm going to move in and own or occupy. You have 90 days to get out. We're going to sell the property. You can ask the seller to have the tenants exit the property for the sale. Could delay the sale a little, but it's possible. Or you could say, I'm now the new owner. This unit needs rehabbed. You have 90 days to get out. Now, each state has a different rule for that. I think New Jersey, you can't make them move out for a rehab. So you have to know your state and local laws, do some research. But in Washington, we can legally get them. It sucks. Rent control makes the owner richer and more tenants homeless. Because when they get kicked out, they've been paying 700 or 800 or $1,000 a month. All of the new rentals in the area are maximum allowable rents because the landlords know when they put a tenant in, it's better to have a place vacant for 3 or 4 months until you find a tenant than to put one in at a low rent that takes you a while to get it increased. So that person's going to not find rent for 2,000 a month in your market. They're going to have to pay way more. So they're probably going to have to move to a whole new area. When rent control was first talked about in Washington, I made a video and I sent it to a bunch of legislators, and the bill didn't even make it out of committee. The next year, when it was talked about, because I'm a greedy, evil human, I just remained silent. And I was like, hey, they've got enough people going in there to testify how great rent control would be. I will let it make it my tenants lose more money and make me a ton more money. And it passed. And here I am making way more money. September 1st, I have to think. So September 1st, because of this bill, I actually sent emails to all of the tenants. There is, I got a Zelle payment. Why do I have a Zelle payment on today? What happened? Oh, nice. Huh. Geez, that's early. Huh. Pays the rent. Was it 9 days early? 8 days early? Uh, that squirrel ran off with the Emperor's Groove. We were on rent control. Uh, September 1st. Rents are going up. I think just in September there's 4 properties that have a 7% increase. I sent them emails. This is where I was. I sent them emails saying there is no planned rent increase for 2025 because we did a rent increase last year. So 2025 was going to be a 0. 2026 was going to be 5%. In the email, it says, unless this bill, here it was labeled, passes, then the rent increase could be 7% plus inflation. I'm not going to add inflation. We're just going to do a 7% increase. 90 days notice. So that's when September 1st happens from when I sent the email, and the bill passed. They already received notice with the email. So because of the bill passing, 7% increase to all of my properties in the next year, but some of them hit September 1st when their lease renewals for from that email go. So Wealth with Rentals, who is going to be responsible for mowing the front and backyard? Depends on what you put in your lease and what you get them to agree to. I have one tenant who he gives some money to the other side of the duplex and they handle the yard. I think I've got a tenant that uses the same service because they asked me about it one time that I do. So it's like a law enforcement thing. Consent is golden. What can you get into? I should go get my Renaissance Fair outfit here and show you. I'm not going as a pirate. I'm a pirate minister, so I have the pirate outfit, so everybody always expects me to show up in a pirate suit. Dave, rent control. Yep. And one last question. Hopefully there's more. Love the questions. We got plenty of time. Kris, howdy. Good to see you. Looking forward to reading your book. Thank you. I'm looking forward to narrating it and getting it done. Because writing the book, I took a break from gaming for months. I don't like that. When I go to narrate it, I'll be taking a break from gaming for as long as it takes. Uh, we'll see how that goes. I'm not good at the narration thing because the stupid requirements of Audible. I'll figure it out. Wealth with Rental. Section 8 tenant contacted me that they want to move in a week. That is if the Section 8 tenant is being evicted because that is too soon. What if this Section 8 tenant is being evicted because that is too soon? They want to move in a week. So they want to move into your property. Don't, well, so if a Section 8 tenant gets evicted, they lose their voucher. If they're moving in with Section 8, you have a lease with the tenant, but you need a contract with the housing authority. Is your property Section 8 approved? Because that could be the thing that delays things. And can you get your contract in place with Section 8 before the people move in? I generally look at it as a red flag if somebody needs to move in really quick. But if it's the 20th and they want to move in by the 1st, or they just want a couple of days to move, that's not a, it might be a red flag, but it's not a big enough red flag to say no. It's a red flag enough to say, hey, let's have a conversation. And if they're being evicted, you might be able to check your local court system to see if there's anything with their name related to it. Just ask the housing authority if they're, you can ask the housing authority anything, see what they'll tell you, but you can also check your local courts. Find out where they're living now and make sure you're checking the court system that holds that. And you can just look at the docket and see what's coming up. Rich, if you found two properties, it came down to the type of roof they have. One having a standard pitched roof and the other having a flat roof. Which would you choose and why? It would depend on the market. In Washington State, I want a pitched roof because we get rain and snow, not a lot of snow. The flat roof, I'm not a fan. I don't think I own any with a flat roof. I have one with a torch down section, small section, but the most of them are pitched. What roof? Yeah, I guess since I have all pitched roofs, it seems like I would say pitched, but it would also depend on the age of the roof, what the inspection found, what the drainage is set up like, what's normal in your market. That's a good question, but in my market, it tends to be pitched roofs. Would be the way I go. Walter Sandal says, hit that like button. That would be much appreciated. Make the internet think that somebody likes this. Fatih, howdy. Hope to see you in the course call tonight with Justin Canberra at 6 o'clock. From near Futureland, just got off work and watching from the top. Nice. Josh, howdy. I know you have a list of things to look at when purchasing a house, such as weather, washer dryer connections, fenced yard, side-by-side apartments. If you had an order, how would you number them? The way that I numbered them in the book. Uh, Neighborhood, and that has pluses and negatives. So I don't want it next to something loud. That's the first thing I do. I identify. So when we do the members only thing, which Josh, you are a member, so you can watch the members only videos. The first thing we do is left to right, top to bottom, identify what we're looking at. How many days on market? What is it? Age of building, stuff like that. So we're thinking lead paint, asbestos. I don't want something too new. I don't want anything newer than maybe 2003 in my market. Most of them wouldn't cash flow. So I have like a window of years that I want to own in. I own some that are older and I would look at something newer, but it would depend. But is it next to something loud, something smelly, or unsafe? So the neighborhood eliminates it first, maybe even flood zone. Or if it's in something like an HOA. Those are all like, that can be a deal killer. Then, I'm trying to think of the order I would put it in. Washer dryer hookups to me is more important than most other aspects of the property. Then parking. For small multifamily, I want at least two spots per unit, unless the units have 4 or 5 bedrooms. Then I'm going to want 2 or 3, like 2.5 per unit. Larger families are going to have those teenagers and whatever. You just want more parking. So washer dryer, parking, pet friendly fenced yards, kind of in that order. And then the math. It's almost the last thing. Yeah. Thank you for that. Wealth with rentals. Hit that like button. David B. Yeah, that helps. Thank you. Thank you very much. That is the point of these live streams, to get complete answers. Your time is important. Somebody's going to ask a question that helps you. Andres, howdy. I have the opportunity of buying a quadplex, but all four tenants are Section 8. Cash flow is very good, but I am scared because I have read Trump in 2026 may significantly reduce funding. Stay away from the FUD, fear, uncertainty, and doubt. Don't think, don't believe. I'm going to use some bad words here. If you don't like bad words, this is the wrong channel for you. Don't believe the retards when they say the real estate billionaire is going to take away funding for housing. It's a campaign thing, one side to the other. We're eliminating fraud, waste, and abuse. That means more money for people with vouchers. AI taping more jobs is going to mean more UBI. It's been tested on a small scale in different areas, probably not going to be federal anytime soon. There's going to be more money for Section 8. Now, could your tenant lose their benefits? Sure. But there is uh, there is, in my opinion, no risk of that program getting smaller. There could be less waste. There could be some more tenant turnover if they come out with requirements of if you're able to work, you must work. So if you can't, here's this X number of years. I know people that have been on the program for decades that it should be that way. If you can work, you should. And if you have Section 8 properties this, hopefully I can explain this because normally I would script this in a video and articulate it in like a point bullet section where it would chronologically make sense. Let's say you buy that property. You now own the fourplex. You do not own a Section 8 property. There's no such thing. There could be low income properties if you got a huge tax break to create low income housing, but low income is not Section 8. That's fixed income. What you own is a property that is approved for Section 8 that currently has Section 8 tenants. I do not own, I do not own one Section 8 property. I have Section 8 tenants in some of my properties. There is no such thing as a Section 8 property. There's all of the properties that anybody can rent. Some of them are approved for Section 8. Some of them currently have Section 8 tenants. When the Section 8 tenant moves out, you are under no obligation to put another Section 8 tenant in there. You advertise it and you screen like normal. I screen for credit score and eviction history. Doesn't matter if Section 8 is paying for it, they're paying for it, or their parents co-signing are paying for it. So if you buy that with 4 units, currently has Section 8, if Section 8 goes away, yeah, you're going to cycle through 4 tenants and then you'll have 4 different tenants in there. It's not a Section 8 property. It's a property that currently has Section 8 tenants. I wouldn't hesitate. That's me personally. I don't want to own all of my properties full of all Section 8 tenants. A long enough prolonged government shutdown can impact payments. If that happened, mortgage companies aren't going to worry about getting their payments. They're going to understand. They're going to have to work with it because it's going to impact everybody. I want about a third of my tenants with Section 8, a third military, and a third working or retired. So if you bought that and it was one of your first ones and all 4, maybe when you have a tenant turnover, advertise and maybe have another Section 8 tenant, maybe have a non-Section 8 tenant. So to diversify your tenant base. Brian, howdy. There may be one caveat to your time answer for David. I made the mistake of buying my first 2 properties for cash. It was a mistake, but the upside is over 3,000 a month. Cash flow downside is obvious now. Downside is very obvious. Yeah, so you can get the cash flow quicker if you buy it, but you're also going to pay a lot more in taxes. You're not going to get the levered appreciation. Uh, yeah, I paid off a property and it cost me $1 million. So buying properties in all cash it doesn't feel bad to have a paid off property, but the downside is obvious now. Hindsight is 2020. The stream is acting sickly today. Keeps on stopping. That's not good. Maybe I'm stroking out and I just keep pausing every now and then. Freedom works. I buy all my properties with cash after I stabilize and analyze, then I shop for the most advantageous debt instruments to get the cash out. So that's a good strategy if you can get the cash together and do that. The downside sometimes, let me know if you've ever had this, is properties appraise most often for what the purchase price is after owning, although you're stabilizing, so you might not have the problem. Properties will often not appraise very high when you're just trying to do a cash out refinance because the way, and so it usually works when there's an uptrending market because appraisals will use current today comps if there's a sale because you have a seller and a buyer who've agreed on a price. So current comps will matter. If you're doing a cash out refinance, they generally look at prices from at least 6 months ago. So if there's been a spike to the value of your properties in your area, you might not be able to cash out as much as you want. That is a great strategy. I did it on my last property. It's my one and only BRRRR. I self-funded a BRRRR, bought the property, paid for the things. I could do a refinance. If I was in growth mode, I already would have. I would have done a full BRRRR, pulled every penny out that I could, redeployed it on the next property. But I'm not in growth mode, so I haven't touched it at all. But that's a solid strategy. Yeah, I like it. Actually, it's I didn't have the, but it took me 2 years to save $28,000 to get that first duplex. And that was 15,000 for the down payment. I had to have reserves, closing costs. Uh, if I saved up to buy cash with what I was making, I would possibly, no, I wouldn't even be able to buy a duplex in my market currently yet. So I wouldn't own one property if I was buying all cash. Brian, since I purchased with leverage, I was able to generate enough cash to buy the next property cash and pay a property off. Do you have any advice on how to handle annual maintenance for remote properties? What type of inspections should I expect from PM? I want to avoid deferred maintenance. I would ask for a detailed list of what that PM's maintenance schedule is. Are your properties in a place where you have HVAC systems? Those have a little more required for inspections. Whenever a handyman goes there, ask your PM for things like where do the rain gutters drain the water to? Because sometimes it could be something as simple as the little plastic duck bill thing that goes on the bottom of the rain thing is facing the wrong direction. Uh, so every time somebody's there, I want pictures of the inside, a detailed report, cleanliness. Does it look like rodent infestation? But HVAC is the big one. That one has, I want at least an annual inspection and maybe an annual cleaning, depending on the area that it's in. I rip them out as soon as there's a problem with them at my properties. So I'm down to two HVAC systems on all of my properties now. And if there's like a, I've never seen a problem with HVAC less than $500. If it's less than $500, I would fix it. If it's more than $500, maybe just looking at it's $500 usually. I want to rip them out and put in cadet heaters. In my market, they're uh, more efficient. They use less power. They don't, and even if they get replaced, it's a couple $100 versus looking at an HVAC is thousands. It seems it's crazy. Cash flow is freeing. Howdy. Flavio, can you help me understand the late fee, $20 or 20%, whichever is greater? So if I charge 2,000, can I charge up to $400 late fee? No. It's 20% of what's late or $20, whichever's smaller. So go to AI, ask it to explain it to you. I had to have it explain it to me too. You can't charge late fees. You can't evict based on late fees. You can't, it's basically it's $20 or smaller. It'll say you can charge this or this, whichever is greater, because that's the limit of it, right? You could charge the other one. It's stupid the way it's worded in the bill. It's very confusing. Go to AI, not just Google. Like go to ChatGPT and say, explain to me like I'm five, the late fees and put the bill in there so it looks up the right bill from this year to understand the new late fees here that basically become non-existent. Julie, are huge apartment complexes being built where you are? Yes. There's some right on the water. There's big complexes. They are drastically increasing the rent around me. It's nuts. So I'm loving it. Build some more. It is possible, Julie, if you're in a place where they build too many, I think there was a town in Texas, Houston or somewhere, where 50,000 units were coming online. I want like 5,000 units to come online in my tiny little town. New builds, increase rents, make people who own properties in my sweet spot of at least 15 years old, if not 30 to 40 years old, uh, rents go way higher than they were. Capricorn. I also have the question, are large apartment buildings built in your area? Yes, here's the southern Massachusetts. They're blowing up. Yeah, you're going to see a lot of builds finishing now because they started the projects in 21, 22 when interest rates were lower. They're finishing the projects now, and there's not a lot of new builds starting. So it's going to seem spiky right now where the builds get done. But 3 years from now, there won't be a lot more builds. So I guess it would depend on the size of your market and the number that are being introduced. It is possible they could soften rents. In Spanaway, Washington, Julie, it about doubled my rents when all of those markets they came online around 2021, 2022, and my rents doubled because of those. Out here in Kitsap County, there's a bunch of markets going in that is drastically increasing rents again. Alinka, how do you handle cleaning and maintenance? There's like yard and passages. So if it's a common area, I'm probably going to hire a service depending on the layout of the property. My fourplex, since it doesn't have the fenced off yards, I have a service that goes in and does the lawn there. Once a year, maybe once every other year, I'll have pressure washed down of the walkways, depending on if there's any moths growing there. Uh, I don't do cleaning at any of the other places where there's a clearly marked fence. It's in the lease. Tenants are responsible for the maintenance of these areas. Consent is golden. What can you get in the lease? Get common areas. There you go. Laura, flat roofs are terrible in Florida because of the rain. Same in Washington. Capricorn question. Have you ever dealt with solar or been entertained the idea? I live in Washington. We've seen the sun this year. I think we had 2 days where we had the actual sunshine. And there's probably more than that. But no, it's not a thing in Washington. My neighbor got solar put on. I'm not a fan of putting in solar. My electric bill here is like 60 to $100 a month. $100 is in the winter when it's cold. So in your area, if you get a lot of sunlight and it could actually save you more if your utilities are $500, $600 a month, maybe. I think I'm not a salesman for solar, and everybody who's ever worked in solar is going to attack me with all the sales pitches that have been drilled into your head by the people who are trying to market the product. It adds to the instability of your roof. It increases the cost the next time you do your roof because it needs to be removed and replaced. It makes selling it harder, especially if you're encumbered by some debt going to the 15-year loan you got to put solar on your house. Not a fan, um, mostly because of my market. Could make sense in other areas. Josh, great info. Thanks. Going for my second multifamily next year. Awesome. Andres, Dion, what percentage of your tenants are Section 8? I try to do one-third Section 8, one-third working, one-third military. And so with 18 units, I'm trying to maintain 4 Section 8. Right now I have 3. So on one of my next turnovers, I'll probably send the listing to the housing authorities in the 2 counties where I will do housing with them, not Pierce County, Washington, not to name anybody, but they suck. And say, hey, send this to your clients. The listing is coming available next Tuesday, so they might be one of the first people to apply. That's how I get Section 8 when I want it. So it's not a perfect balance. It's a goal. Laura, my Section 8 did not lose their vouchers. My Section 8 tenant friends smoke inside the unit, house a person that broke a parole, sublease the backyard to homeless people. Jesus. Yeah, no, that sounds like an eviction for lease violations ready to happen. Hopefully you have some things in your lease that define not allowed to sublet. If you put tents in the backyard and you put it on Airbnb, you should get a cut. Yeah, nightmare tenants can be Section 8 or not Section 8. JMC, howdy. Hope all is well with you too. Josh, tenants I have say they plan on buying a home next year before putting it back on the market. What should I repair and what should I upgrade? So tenants say they have plan on buying a home next year. I've had several tenants where I've told them you should buy a house, you shouldn't rent, you should buy a duplex. You should live on one side, rent out the other, just like you are now, except you get to screen the neighbors and you'll be making money. None of them have ever bought a duplex, but some of them have bought houses. My lenders, when I go to get a loan, like to see at least 3 months remaining on leases. So, uh, I'm hearing an echo of myself from the other room. My tenants always sign 12-month leases. If they tell me, oh, look, I'm going to buy a house, I go, great. Here's my agent. Here's a lender. Hope they can help you. If not, you have your own. That's awesome. But I want the 12-month lease. So most of my leases have a $2,000 or $2,500 or just below their rent lease termination fee. Like if somebody says, I want to break the lease early, they basically pay me almost a month's rent. They can break the lease. But if I know they're going to be buying a house, I tell them, that's great. I need the long lease. We're going to commit to 12 months, but we're going to make the lease termination fee $50. My lender has never come to me and said, hey, you got all these leases. They're nice and long like we like, but this one, the termination fees, I don't think they've ever even looked at that. They just want to see the dates of when does it start, when does it end, because you have to have 3 months remaining on at least 50% of your leases to qualify for the next loan. So I've made sure I did that. I subleased the backyard almost. Before putting it back on the market, what should I repair and what should I upgrade? So I generally look at the blinds, look at the screens, look at the lights, update lights. If there's anything that isn't an LED light, I'll generally update it. Could potentially need to paint. If you have people like Laura did where they smoke in the unit, you're going to have to go through all of the listings of, a vinegar wash, uh, kills paint, rip out all the flooring, rip out the blinds and the screens, sacrifice goat, that ozone machine. You still like a lot of lists to get rid of that kind of stuff. So it depends on the state that it's in. How old are the appliances? Look at them, right? I don't just generally replace all of the appliances, but I will do things like, make sure the refrigerator, you know, doesn't look like it's at least 20 years old. Uh, Washing, I take out the washing and dryer machines, but the dishwashing machine is something that I supply. The stove, just look at the appliances, see if anything needs replaced. I find a secondhand place to get my appliances from. It's the only thing I buy at like Lowe's or Home Depot is the dishwasher and the refrigerator. If I'm replacing a stove, uh, or the hood or one of those, I'll check. There's in Washington State, in Lakewood, Washington, there's a place called TV Time Appliances. They do free delivery, 1 year warranty, really good prices. So there's your unpaid commercial for them. But most of my like stoves and hoods and not hoods I get from Habitat for Humanity. There's but stoves and something else I get from them. What else did I get with them? I don't think I got any refrigerators from them, but I probably because they're pretty cheap, like 700 or 800 for brand new ones. But nice stoves. I'm not going to spend $1,000 on a rental stove. I'll go get a secondhand one from that appliance place that looks new and comes with a 1 year warranty with free delivery. I've had zero issues with them. So, what else? Look at your paint scheme. Make sure that your trim and your walls are different colors. I've seen a ton of people with their own rentals for some reason, and they don't realize how big a difference that makes. Flooring, I generally don't buy a property with tenants in place and rip out the carpet. So if I buy a place that has tenants in place and then they move and there is carpet, then I will rip out carpet and replace it with LVP flooring. The only place I don't is on the stairs. I think I saw somebody in the One Rental at a Time group recently asking, what do you do with LVP on stairs? It keeps coming loose and it breaks. And no, I like to have carpet on stairs. Less chance for slipping, skid fall injury. We're in Washington where your feet can come in from outside nice and wet, which is why I don't want carpet in most rooms, but I want it on the stairs. You could, I don't tend to do it, but look at your windows. How out of date are they? It could be a big time for a big CapEx expenditure. If you have old aluminum one pane windows, yeah, it's time to spend the money and put those in, right? I don't wait for roofs for tenant turnover. That can be done with tenants in place. I don't replace cabinets and countertops. Not me, because I'm way too lazy, but Chesla is amazing. Chesla has sanded down and painted and re-hardwared some of my kitchens. Uh, and even with those, I didn't do countertops. The only time I did countertops is here at this property where we did countertops at Chesla's property, one of her duplex units. Uh, but here where I'm at in my burr, we did a butcher block. And so we did downstairs and upstairs. which is my only up-down duplex. But the cabinets were bad and it was time to get new ones anyway. Again, I'm way too lazy to do that kind of stuff. That's her tenants. I have, hang on. Okay. The grumpy contractor. Howdy. Have you done a binder on a remote property, small population, limited data to go off of? Yes. So I own a property in McKenna, Washington. 400, there's like 450 population now. It was 600 when I bought there. I don't care about population count. What I care about is distance to economic drivers. It's not too far from a base. It's not too far from a Walmart. It's not too far from the state capital, right? So find the local work hub around you and then draw a circle all the way around it, the same distance. So if it's a 45-minute drive to the local city where people might work in your area, 45 minutes in all directions. In Washington, that's probably up on a mountain or out in the water, so it's above or below it, north or south of it. What are the rent comps in that circle, that same distance from the work hub? The, you don't have to have exact like for like exactly where you're at. You have to have properties that are similar to yours, even if they're in another area, as close as you can. So it could be on the other side of the circle, but closest to that work hub. But I've done binders on the places with limited data to go off of too, which sometimes helps you. There's not a lot of choices to move to. What does Section 8 pay there? What will BAH be there? There's a couple of data points that you can use. Tati, 500 pages to financial freedom. Nice. With 4 pages for notes. Josh, how do you deal with pest control if you get an infestation like bed bugs or roaches in a multifamily homes? So I haven't had the bed bugs thing. I have had rodents, put down rodent control. I live in Washington. We get sugar ants every spring. So I just educate tenants on this is Toro. You buy it at Lowe's or Home Depot or Amazon and you put it out on the trail. Uh, my tenants fall prey all the time to the door knock guys that come up and sell them a pet care package of $200 or $300 a year with a contract with at least a contract termination fee. And every time I talk to my tenants, I'm like, oh, go buy some foggers and fog your house. Go put some rat poison down. Like it's all in the lease that rodent control is up to them. Now, if it haven't had it happen, but if I have an infestation where one unit infects multiple units, yeah, I'd probably hire a pro. I'd have them put out the traps, do the spraying, do all of that. Contract company. I'm not going to sign a contract. I don't want it, even if it costs me twice as much to get it done. I just want this one time done. Uh, yeah, I guess that can be challenging. Capricorn, I live in Washington. Great answer. Yeah, there's not a lot of sun here. Laura, for a solar system, check with the insurance property first. Some insurance companies on Florida denied insurance houses with solar systems for all the reasons that Dion mentioned. That is an awesome thing to know. I didn't even think of that. Yeah. Does it void your insurance? Because whenever you make an insurance claim, remember your insurance company has a department of people whose job it is to make sure they don't pay you. So don't give them a reason. We will be ending very soon because I got to get ready for the course call at 6 p.m. clock. 6 p.m. o'clock. That's like 0800 hours. ATM machine. Too many words. In about 20 minutes, we have the course call for Financial Freedom for the Lazy Person with Justin Canberra. Capricorn, the stairs bring up a good question. What do you look for when insurance shopping? Insurance shopping. Good coverage, good reputation, good reviews, decent price, and price comparison. So I always check with multiple places for insurance. I've ended up so far every time with Geico underwritten by Stillwater. I think Travelers underwritten one or two of them for my weird property that's 2 policies on 1 property. Uh, but I still price shop. And I just haven't found as good of coverage for the right price to make me switch to another insurance yet. I believe this week I'm going to go to Steadily and I'm going to use the one rental at a time thing. I'm gonna have to listen to Michael Zuber's daily update and figure out what the Steadily code is to make sure they know I'm there because of him and get a quote on my most expensive property, my biggest increase in the last year to see what their quote is. And I'll make a video on what my experience was like with that. Uh, Laura, my lease said no sublease. Yep. When I contacted the home authority, they told me the lease was between me and the tenant. I don't renewed, and the tenant was placed in another place. Kept voucher. Yeah. So you didn't evict them. That was the lease thing with you. Yeah. Don't poison, they will chew through pipes. So the Gumpy contractor, yeah, when you put out the rat poisoning, it dehydrates them, makes them thirsty. Not only will they chew through pipes, pecks they'll go right through, but they'll chew through the dishwasher drain hose. And I actually have one place. It's next to a field where the rodents live in the field all the time. So we did that thing. And what we did is we went to, it wasn't available at Lowe's or Home Depot. That couldn't, maybe it was special order for them, but we went to a McClendon's, which is maybe it's a Northwest thing. I don't know. Maybe they're in your area, but find an electric, like an electrician's outlet store and get electrical conduit, the metal ribbed piping, ribbed for your rentals. And we literally, the dishwasher drain hose goes through metal conduit for electric to stop them from, because it makes them thirsty. Very good point. You could do the traps. Yep. Pay for pest control, but it's in the lease that it's the tenant's responsibility. There you go. Yeah. Everybody have an evening full of amazing. Remember, don't time the market. But the beginning of this video was how I'm timing the market. I will see you on Thursday or Saturday in the next short video because that's the way my channel works. If you're new to my channel, every Tuesday there's a long live stream that lasts as long as these questions do. Then on Thursday or Saturday, I do a 10 to 15, sometimes 20-minute video for the people who wouldn't click on a 2-hour video like this. And I hope the information is helping you. And I hope you enjoy the book as soon as I can get it out. And I will definitely be announcing that. And I look forward to the feedback because I write like a 5-year-old with brain damage.